Hey everyone, it's Jose Laya and we hope you're doing well. Today we want to talk to you about the challenges that we're facing in the condo market. We've touched on this in prior videos and we feel it's important enough that we wanted to make this video specifically on this topic. So the condo market's going through some challenging times right now, as the last couple of years has brought on new laws and regulations that are seriously affecting it. The biggest one being the new law in place called SB 4D, also known as the Condo Safety Act, which has brought with it changes throughout the industry, including tougher guidelines and regulations from lenders and insurance companies. These new regulations and guidelines have brought on major challenges to the condo market, of which the top three that we're going to discuss today are increased maintenance fees and forced special assessments. Number two, tougher loan guidelines from lenders. And number three, tougher requirements from insurance companies. We are currently facing these challenges all at the same time, which we've never faced before. So needless to say, it's causing a lot of uncertainties in the condo market, especially for aging buildings. We're going to examine today how we got here and what we expect the outcome to be. So let's dive right into these topics. Here we go. Okay, so the first topic we're going to start with is increased maintenance fees and forced special assessments, as we feel this is the one having the biggest impact on condo buildings right now. When the tower collapsed in Surfside in June of 2021, as local governments started to uncover what happened and how, they found out that the building was in the process of starting its 40-year recertification when it collapsed. As a result, Miami Dade County advised all municipalities to conduct an emergency audit of all buildings that had started their 40-year recert and not completed it, and also those that were over 40 years of age and had not started the process at all. What they uncovered during these emergency audits was that a lot of the buildings who were in violation were so because the associations had voted to not collect reserve funds for necessary repairs or replacements of major components, as most of the time the owners did not want to have to pay more money out of their pockets, so they would not vote for it. This caused a lot of the buildings to do the same, and they essentially kicked the can down the road, which unbeknownst to them was causing some extreme conditions as these buildings aged. And as long as everything looked okay, they would just keep doing the minimum to upkeep the property. As all of this unraveled in the months ahead, state and local legislators were working together on how to improve this process going forward to ensure that something like this would never happen again. And about a year after the tower collapsed, the regulators passed a new state law in June of 2022, which, as we said, is known as SB 4D, also known as the Condo Safety Act. This new law included 88 pages of new rules and regulations condo buildings had to follow, of which the most impactful have been new procedures for milestone inspections and structural integrity reserve studies. Let's talk more in depth about the structural integrity reserve studies. Okay, so a structural integrity reserve study is a newly developed form of reserve study required by this new statute, which is the Florida statute SB 4D, which is designed to ensure that condo associations reserve for funds for the long-term maintenance and necessary replacement of critical structural elements in their buildings. Funds for these repairs must be collected according to the schedule of the reserve study. This has had a profound effect on condo buildings, not only throughout Miami-Dade County, but the entire state of Florida, as the new law also requires that any building at least 30 years of age must perform this study no later than December 31st of 2024 of this year in order to be in compliance. They are also requiring that these reports be filed with each municipality to encourage enforcement and transparency. As a result of the new law, you are seeing some buildings where maintenance fees have skyrocketed in the past couple of years. We've seen some maintenance fees double from previous years, while at the same time, if they're having to play catch up, we're seeing huge special assessments being passed because now again, they're being forced upon them as they must be included based on the reserve study. So we're seeing some special assessments in these buildings amount somewhere in the amount of, tens of thousands of dollars per apartment. We've also seen some that have reached the hundreds of thousands of dollars per apartment, which you can imagine is putting a tremendous financial pressure on the owners in those buildings. So the other side of this that doesn't really get enough coverage is that once these studies are completed and the assessments are passed and construction starts, you are now living in a construction zone, which we've seen from personal experience and from being in the markets daily, that living in a construction zone, most of the time, these studies require some concrete work, which is the concrete restoration, which includes, it closes down amenities such as pool decks, because pool decks have to be resurfaced. And a lot of times it'll close down balconies of the apartments, which honestly, if you're living in a condo, one of the biggest amenities you have or enjoyment you have is your balcony. We've seen balconies being closed for 4 to 6 months, sometimes 9 months. We've seen pool decks currently closed for 1 year, up to 2 years of pool deck closed. You can imagine living in a construction zone, you're dealing with all the dust, all the debris, the noise. It's a huge level of discomfort. While at the same time, obviously it affects sales, but it also affects rentals in the building. As anybody walking through these buildings in a huge construction zone, it obviously affects the sales and the rentals in the building. So now let's talk about the second topic that we've highlighted, which is the tougher loan guidelines from lenders. As a result of the collapse of the tower in the summer of 2021, lenders have tightened their criteria for making loans in certain buildings. I've always told clients, when you're working with a buyer and they're looking to buy a condo, you have to understand that in the condo market, lenders are going to qualify you as the buyer, and they're also going to qualify the building to see if they'll give you a loan to buy in that certain building. As a result of the collapse, now they've added an extra layer. So historically, lenders always had what's called a condo questionnaire that they would give to the association. It's a few pages of questions, of details of the property, of the building, that had to be answered by the association. On top of that condo questionnaire, they've now added an addendum. The addendum specifically focuses on the condition of the building and if and when the building has had its structural integrity reserve study done, and if so, what were its findings. So if the building does not meet these new lending requirements, the lenders will not finance purchases in that building. Therefore, it greatly affects sales in that building, as anybody looking to get a loan in that building will not be able to. Therefore, you're going to have to sell to a cash buyer. And a cash buyer goes into this building, they know that they can't get loans, they're going to ask for a discount. So this is just another after effect that's greatly impacting the condo market right now. The last topic we want to cover is the tougher insurance market and new guidelines, especially for condos. Think about this. In a matter of a little over 1 year, we had the collapse of the tower in Surfside in June of 2021, followed by the catastrophic Hurricane Ian in September of 2022. Think about this. As the local municipalities and the state of Florida were dealing with the after effects of the collapse of the tower, they then had to deal with a monstrous hurricane, which not only nearly missed us here in Miami Dade County, but then proceeded to go up the west coast of Florida, wreaking havoc and destruction on the coastal cities of Fort Myers, Naples, and the Sanibel area. The hurricane caused such devastation that nearly 2 years later, some areas are still trying to recover. So these two back-to-back events has not only forced many insurance companies out of business, but it's also forced many of them to leave the entire state of Florida. And those that are doing business in the state, we've seen premiums increase 2 to 3 times what one used to pay. While at the same time, they're introduced much tougher guidelines, especially for older buildings, which if these buildings do not meet their new criteria and they're not in compliance, they're not going to insure the properties. This all means that if you cannot get insurance for the building, then lenders will not finance your purchase, which again means only cash buyers can buy in certain buildings, which of course greatly affects sales in these buildings. We do want to point out this issue with the tougher insurance requirements. is also affecting single family homes, especially the older homes that have not been updated and do not meet these new guidelines. So please know that the insurance regulations have been tightened across the board in the real estate market. So to wrap things up, after 18 years in the real estate market, I can honestly tell you that we've never faced a scenario like this before, especially all at the same time. Needless to say, it's causing a lot of uncertainties in the condo market, especially for aging buildings. These three topics we just mentioned, they're having a huge impact on sales in certain buildings, especially if the buildings were not in compliance and they're having to play catch up. And it's also affecting rentals in the building as well. Imagine the scenario you have playing out right now is the following. Not every owner is able to deal with this financially, because once you add up the new higher maintenance fees, the huge special assessments, not being able to get insurance on the property, and the uncertainty of it all, not every owner can deal with this financially, and it also adds a lot of stress to them. So you're starting to see these apartments being listed for sale. The flip side of that is that not every buyer has the fortitude to deal with this and take this on. So you're starting to see these apartments sit on the market with really no takers. It's causing huge financial pressures on these owners and sellers to sell as fast as possible. We feel this situation in the condo market is going to increase and is actually going to get worse as the deadline of December 31st of 2024 approaches, while at the same time we're going into hurricane season, which is another unknown factor. We also feel this will bring out more situations where unit owners may get together and try to sell the building outright to a developer, which the truth is that for some, that may be the best solution. If we have to give you a timeline on how all this plays out, we feel this could be a couple of years before all this gets ironed out and things improve, as it will take some time for these associations and buildings that are playing catch up to not only normalize their buildings and finances, but it also take a while for the owners, for the current owners to sell and then new buyers to step in, while at the same time, the insurance market to kind of regulate and stabilize itself. For anyone out there who lives in a building and you're going through this tough situation, if you need any help or guidance, please reach out, as we'd be happy to help. Again, we enjoy providing you with this information. We try to provide this to give you a deeper insight into the local real estate market here in Miami and help you make informed decisions about your home purchase and or home sale. We love being able to provide value and to be of service. Thank you for watching, and we'll see you soon. Have a great one.